so much to talk about. Let me tackle, let's take a look at the stock market first, right? I want to throw up this chart. Chinese stocks entering a bear market. We look to really stay in this negative territory. There's not a lot of analysts come out and saying that we've hit much of a bottom yet. But to be fair, Chinese stocks were languishing for a long time before we entered this bear market. You're saying that this is essentially unfinished selling from 2015?
Yeah, I think that the government stopped the market from fully adjusting and supported the market with state funds, and also forced a lot of institutional investors from selling. So the government revived the stock market, especially in like the tech sector. We've been seeing this crazy internet stuff going on. So this is basically the payback time for the government's preference for managing the economy by inflating or deflating bubbles, because the government thinks that it can manage bubbles easily, and they are tools for keeping the economy up. So I think this is really payback time.
Do you get back in there? I mean, if this is a sense of, kind of letting the toxins from 2015 bleed out, if you will, are there opportunities once we do get to some sort of level bottom?
Oh, absolutely. I think that there are a lot of stocks that are quite cheap, but some stocks are cheaper for a reason, like the financials. China's blue chip index is not expensive, mainly because the financials are very cheap. Everything else is not so. You look at it like a company, like Multi is trading at 40 times. And that's not really a fast-growing business, so it's very expensive. And also the Chinex index is still 37 times earnings, even though it's like over 60% off from the top. So I think that there's a lot of adjustment to be done. But on the other hand, you have like telecom companies are really cheap, and I think telecom companies are real companies. That they are here, they will always be here.
Andy, what does the yuan tell us? The falling yuan at the moment, what is that reflective of? And is it, in your opinion, possibly deliberate policy from central government?
Well, in China, there are always many considerations coming together for something to happen. The most important is financial stability. The central bank cut RRR to support the financial system, especially the stock market. As you heard from this risk report, China's economy is highly levered. And when you have a trade war talk, the financial stability becomes an issue. So the knee-jerk reaction is to release liquidity. So that means that the currency is going down. At the same time, they want to make exporters feel that the government cares about them. So you should not move somewhere else just because of the trade war talk. So there are a lot of concerns, and there is the angle of pushing the dollar up, make it unprofitable for the U.S. trade war talk.
Well, let's talk about the trade war talk, which could turn into a trade war on July the 6th if we get tariffs put on a load of goods at that point. Now, I think your contention here is, OK, trade is good, but let's not get Pollyanna about it. Explain, please.
Well, I think free trade is, people have been saying that free trade is always good. That is not really the case. Certainly the middle class in the United States is vanishing, partly because of global trade. And at the same time, China is complaining about lacking domestic brands and technologies. So China is doing the low-end stuff. So that's why we have this Industry 2025. There's this frustration building in China for a long time. So there are a lot of unhappiness on both sides. So we have to take a step back and say, why should we stick with this model when both sides are not happy? So let's negotiate, and maybe the right approach is manage your trade.